Hey guys, Lee Gettess here with the Market Sense for the week of August 25th, 2015. Charts are going to come from the Trade Navigator software, which I really do just use the heck out of during the day and for research. Anything happened since last week? Yeah, a little bit. First in bonds, which really don't look quite so bad. Bonds have had a big rally and a sell back off, and obviously this is in relation to all of the crap going on with China. They haven't done anything too terribly untowards except to be rather sloppy. We were looking for resistance up here around 162.04, and they shot all the way up above 163. But then they turned and came back down all the way. Support's probably 158.16, and they, undershot that down in the 157.20 area. And that's what you need to understand. When volatility gets high, you can't expect anything to be accurate. Everything's really sloppy, and they move in a ridiculous hurry. And sometimes you have to judge things by how much time they spend above or below a certain level. We still have the potential to do almost anything here. I mean, if stocks continue to rally, we'll probably see bonds go back to the 156.08 area down in here. That wouldn't be surprising at all, particularly given how strong they've rallied for the last few weeks. By the same token, if fear grips the market and we get another global sell-off, that upper calendar channel's above 164.04, roughly a little higher. No problem getting there. Fear will make people buy, in droves for safety. So anything's possible, but it wouldn't surprise me if they've basically kind of already made their high and low for the week. Again, if they don't, considerable distance in either direction that they could still go. And again, those prices are 156.08 for the bottom, 164.04 for the high. Stocks look drastically different. Just look at those last 2 weeks. We basically in the last 2 weeks have done, what, 2 times, maybe almost 3 times as much as we've done for the entire year before then. Of course, that is more a function of just how quiet the market's been up until now, although the volatility certainly is reasonably high. We'd be looking at 2025 as the logical resistance this week up here at this lower moving average, and you can see not even a sniff. They're so far below that, so we could have one stupendous rally and not make any difference. We were looking at support 1922. Clearly they've broken below that. And I guess what you have to understand is on a weekly chart, they pretty much have broken anything, but they've just gotten so far that they're kind of ridiculous. Now, there is always additional support and resistance. You can always find it someplace. And what we're going to do is we're going to look at a yearly chart. Sometimes a longer term perspective helps here. As nasty as this sell-off is, and it's nasty, the support for the year is right here at this upper moving average at 17, let's call it 1755. You have to understand that's the support that should hold if they are going to continue to trend up, which clearly they have been doing for a few years. So the support in an uptrend is 1755. They could get down to 1755 on a yearly basis, they'd still be in an uptrend. That kind of helps to have that perspective. Now, by the same token, they haven't even traded that upper moving average for the last 3 years before. So wouldn't be surprising to get a bigger break back down, including all the way back down to this level here, which is below 1500. I wouldn't rule anything out. I just want you to maintain perspective. Yes, this is nasty. This is ugly. They're selling off big time. But in the big picture, they haven't really done any damage yet to the really long-term chart. So it depends on your time frame, I guess. So that's what we've got for you today. I hope you can find something profitable to get yourself involved with. Thanks for checking in to see what we think.